So we closed right on 4,450 for SPX on Friday last week. Remember, 4,450 to 4,500 is one of the strongest ranges I have in the entire market in terms of a resistance or a support, depending on the direction that price goes into it. In this case, right now, it's acting as a hard resistance. So I'm very interested to see this week, especially because it is a shortened week. We have a reduced trading session tomorrow on Monday and then no trading session on Tuesday. I'm very interested to see what type of rejection we get within this range. Now, I do expect there to be a hard rejection from this range. However, what I'm really looking at is the potential of a cup and handle. Now, there's two scenarios that can play out here. One being a double top rejection. Of course, right now we're within a double top, at least on the daily chart. We have the first top over here, followed by a potential top over here. And again, like I said, I expect there to be some form of a pullback later into this week. Monday can be hit or miss because that is a shortened session. There's going to be reduced volume, etc. But for Wednesday and possibly Thursday, there's going to likely be some form of a pullback here. And what I'm going to be watching for is how far will this pullback go? Because again, like I just said, if you use this tool here, the curve tool on TradingView, you can see we do have a potential cup and handle setup. This being the cup right here, we have a rounding pattern followed by a spike to the upside. And now, again, because we're within this hard resistance area, I expect there to be an initial pullback. And depending on the strength that we receive during this pullback, and at least if there's a bid around this mid-range over here, which I'll show in terms of this curve tool, if price can find a support around this 4,420-ish to 4,430-ish range off of a pullback, then it's likely we see a breakout back into the range provided, and we're likely going to see a test of the high 4,400s and even close to 4,500. So this would be the case if price is able to have a bid, especially around this, again, 4,420 to 4,430 range. So watch for that this week because I do expect this to get retested. The question is, will it be able to find a bid around this range and then be able to bounce off of it for continuation upward? Otherwise, if it's unable to do that, then we will have a double top formation. So everything relies around this 10 to 20 point range around here. Otherwise, if we do fall below that, then we're likely going to see 4,400 again, which would be a gap fill of the previous gap that was made between Thursday and Friday of last week. If there's a gap fill, that would negate a lot of the momentum, or at least potential momentum that bulls have here for some form of a short-term breakout. So this is one of the main setups that I'm watching for this week, and it's totally dependent on how price reacts to this range here. So do watch that. If we do get this retest, again, looking for some form of retest around Wednesday or Thursday of this week, because of these shortened trading sessions with the 4th of July. But keep this in mind going into this week. Also, I do want to talk about dark pools for this week as well. Looking at the dark pool levels feature, we actually had a reduction in overall premium this week. However, based on Fridays, we still had a decent amount, 3.7 billion in premium at the 438 level. This is the most out of the entire week. And we've actually seen quite a bit of premium at this roughly 438, 437-ish level in terms of dark pool prints. Going back here to Thursday, you can see that we had 1.6 billion in premium. This is at the 436.10 level, so kind of close to that 438 as well, which we've been seeing a lot of premium on, like I just said. And then 1.2 billion on Wednesday, so this is the lowest of the entire week, also in the 436s. So as you can kind of see with this graphic over here, we've had a decent amount around this range, especially before price popped off on Friday with that big gap up and continuation upwards. So this 436 to 438 range is especially crucial, at least that bulls want to see price stay above going forward. Just to show you a visual here, you're going to want to see price stay above roughly this range right here if it is retested in the future. If this range cannot hold, then we're going to see a sharp sell back to around the low that we made back here where my reversal date hit. Remember that reversal date was on Monday of last week, the 18-day cycle that I shared in the previous video. We did see a strong bounce to the upside based on that reversal date, which had continuation all the way into the end of the week. So in the future, when we do see a retest of this red range, it's going to be crucial to see if bulls are able to hold it as a support, because initially it will act as a support, but how long will they be able to hold it for is the question, because otherwise, if price is able to fall back under, then we will see a sharp sell again back to that low 430s range. And if we take a look at big tech over here, you can see Meta is actually actually in a rising wedge pattern right now, which could be interesting to see which direction it chooses. I will likely take a trade on this just depending on the direction. So right now I'm unbiased to what side it will go, but if I see hourly confirmation under or above this rising wedge pattern, then I can take a position based off of that and then also have an hourly close as the risk. For example, if we saw a breakdown under this level over here, roughly around 285 with an hourly close under, then that'd be confirmation that we're likely going to see downside afterwards. Again, risk would be an hourly close back within that level. And I would give this about 2 attempts on it just because an hourly close is not that much in terms of overall risk. So if you see an hourly close below followed by an hourly close back in after, I would cut for minimal losses and then attempt it again if it were to be the case, or we see another hourly close confirmation under. So that's likely how I will play it for this week. The inverse would be a break above on the hourly with the same risk setup. Additionally, here on IWM, I'm also watching this because it is at the end of this pennant structure right here, which you can see the top of it starts back here in March of 2022. And then if you actually look at the lower end of it, it goes all the way back to this 2020 bottom and connects to the low that was made here in the middle of 2022, September of 2022, that is. As you can see over here, we are back within this pattern. And one could also argue that there's another line, at least one that I've been watching, that starts over here based on this pivot and goes across. So it's a bit wider overall. You could go either this way with a couple wicks under or go for the wider angle here. So you'd actually have a lot more and you'd extend this trend line down here. But as for what I'm looking at right now, I'm watching this line specifically, at least this resistance. Yes, we did have a technical breakout over here. We had 2 daily closes above, but I was unable to have continuation above. So it ended up being a fake breakout. So I would negate both of these lines over here. But since we're near the end of this pennant pattern, I'm looking at some type of a breakout, if that is to be the case, later this week or early next week. If there is going to be some type of a breakout here, this will be a viable tactical long setup because we've seen price consolidate for quite a bit within this range here. It's been a wide range because the pennant is fairly big, but if we do see a breakout here, this will rally for a couple weeks if it is a strong breakout. So I am watching this. Again, the level is roughly around this 188. So watch that 188 level. If we do have a break above, especially on the daily, that would provide a good signal of confirmation and likely would set up for more upside after that. So that's what I'm gonna be watching for this week. And lastly, I thought I'd do a chart analysis here on Nvidia. We are stuck within this channel right now, and it has been since it started all the way back here after that major earnings gap up we had back in May. Price has just been stuck bouncing in between both of these. So in terms of a large scale move, you're going to want to see a break in either direction. As for the flow, it's actually been very bullish as of last week specifically. Even most of the puts that we saw here are those arbitrage trade strategies. So I don't really count these as much. For the most part though, it's been a lot of calls and most of them have been out the money as well, with a shorter term expiration overall, just a lot of them being August and even some July here. So a lot of calls, which is pretty incredible because of how overextended it is right now. But until it can have confirmation below this trend line right here, it's unlikely there's going to be a large scale move to the downside because it is backed by flow as well as this channel at the moment. So again, looking for confirmation under if you do want an attempt to short on this, but I don't see this setup until further on in July. So I will wait on that, but thought I'd do an update on this one because it's been highly requested. As always, best to wait for confirmation below or above on these, similar to the one I showed you on Meta here earlier in this video. But other than that though, appreciate you guys watching this video. Have a good 4th of July and I'll see you guys next time on Wednesday.